Hi, I'm Billy Keels, the host of the Going Long podcast. Every week, I'm going to be here interviewing the absolute best in the business as it relates to real asset investing, as well as real Main Street investors. We're going to be having conversations where you can listen in, and that's going to help you to continue on your path to education so that you feel much more comfortable as well as confident in investing long distance. So make sure that you go ahead and subscribe to the channel. Make sure that you're liking it as well, because that way you can get every single episode as soon as it comes out. And by the way, don't forget to leave today's episode a 5-star review. Let's go ahead and listen to today's conversation. Welcome to the Going Long podcast, where we're back once again to continue to help to educate you so that you feel much more comfortable as well as confident investing beyond your backyard. And if you've ever wanted to learn how to protect and grow investor capital through commercial real estate syndications, then guess what? Today's the conversation that you're going to want to listen to until the very last word. Because today's guest not only is truly passionate about educating investors about passive income investments, he also has 16 plus or over 16 years of experience as a commercial real estate broker, investor, developer, syndicator, advisor, and he also oversees a large portfolio of assets as he's the partner at HJH Investments, which has over 300 million in assets under management. And he's also the managing partner at Kogut Commercial Real Estate. I'd like to welcome to today's conversation, Mr. Ben Kogut. Ben, welcome to the show, man.
Billy, thank you so much for having me. It's an honor.
Hey, man, I'm really looking forward to this. It's going to be an awesome conversation. Love the pre-chat. And so, I want to jump right in, man, because I want everybody to get to know you because you've got an awesome story to tell, so much stuff going on in the commercial real estate space, and I know it's going to be absolutely awesome. So, I like to ask everybody the same 5 questions, and then we're going to have some conversation in between. But let's get started, man. Where exactly do you live in the U.S.?
Yeah, so I am in Austin, Texas. I've been here for 20 years. It's the live music capital of the world, and now home to Tesla and Apple and Google and all the wonderful companies here in the States. So come on down to Austin, Texas, everybody.
In Austin, I think has some pretty decent music as well, right?
It's the live music capital of the world, of course.
So, so listen, so it's an amazing city. Love it a lot. And so let's go into the next conversation piece, which is, what is the most positive thing that's happened to you in the last 24 hours, Ben?
So in the next 24 hours, if that's all right, I will be flying to Orange County, California to pick up a Ford Thunderbird, of which I am now getting because I do a lot of creative bartering sometimes. And so I bartered some equity that I have in a real estate project in exchange for the vehicle. And so I will be going out there tomorrow and then driving it back over the next 4 days back to Texas. So pretty excited about that.
Oh man, what a cool trip. So what's the trip back from Orange County? Do you have it planned out already or?
Quasi. I have a travel buddy that's coming with me, and we just decided that we're mostly going to improv it. We have a general idea, probably going through Flagstaff and maybe Albuquerque on the way back through Texas. So wish us luck.
Oh man, so that sounds like an awesome trip and nice on the bartering, man. I like that. That's kind of creative. So maybe we can. I'm sure you're going to share some secrets with us as we learn more about you and your story and all the value that you're adding to so many people. So, Ben, look, I gave like a really, really high level about your backstory, but I would love for you to share with me and the entire Going Long family more about your backstory. Also, too, I think it's always really interesting if you can talk about some of the major decisions or inflection points that you made up until this point in your journey. And then from there, you and I will pick up the conversation and we'll see where it goes from there, man.
Yeah, so my journey is coming to Austin, graduated from the University of Texas, got right into commercial real estate as a broker back in 2004, and had just focused on that. Just got my CCIM, which is a certified commercial investment member, which is like a commercial real estate designation. Then I went on and got my MBA back in 2010, 2011. And it's always been this journey to focus on commercial real estate and investing and learning the unit economics of business. which are the fundamentals that I think are what drives all businesses, and in particular in the real estate business. And so that's been my journey. After graduating from business school, I started investing, I started a development company, and I started a brokerage company. And so with all that, it led me down this path of having extra capital, and I was looking for somewhere to invest. And so I ended up investing with HJH Investments with my now partner, Corey Harperroad. And so from that, I was looking for ways to earn passive income on to create financial freedom for me and my family. And so along that journey, I discovered the benefits of commercial real estate and syndication and passive income. And in the States, it's depreciation benefits and with their tax benefits and all that lovely stuff. And I have, put my foot on the gas pedal, so to speak, just learning as much as I can about this particular subject, as much as I can. And now I'm in a position where I get to teach other people about it. And it's really just, it warms my heart. I've been focused, I've been with HGH Investments approaching 3 years now, after my partner invited me to join the company. And really what I've learned now that I raise capital, but what I've learned is that I am a teacher, and I didn't know that about myself before getting into this role with HJH. And so I get to teach people, and it's just it warms my heart, and it's really a beautiful thing. So yeah, so that's a little background on me.
So that's actually really, really interesting stuff, Ben. So starting in 2004, and then having this really clarity of vision in terms of wanting to understand the unit economics, right, around commercial real estate, which I think is sometimes people figure that out later. And you had the clarity of vision to get that done really early on, I guess, as you did your MBA and stuff. So, but just out of curiosity, this always amazes me. So, because you started right into commercial real estate after college, like, do you come from a family that was already oriented towards real estate?
No, I come from an entrepreneurial family, but not in the real estate business.
Okay.
The path so I had an idea back in college to do 50 informational interviews, and I did that in a 6-month period of time. And so that was during college. I was trying to figure out what to do after college. So this is around my junior year. And so I reached out to 50 different people within the Austin community, mostly people that were entrepreneurs. And I sat down, I asked for a breakfast or lunch or whenever I could get their attention. And I said, hey, what do you like about what you do? And I really paid attention to, what do you not like about what you do? And I just, asked a series of questions around that, and it led me down this path of commercial real estate. I just found people in commercial real estate, and I listened to them, and I really loved what they were up to. And I said, you know what? That's what I want to do. And really, it was like an aha click moment, and I just have been pursuing it 100% ever since.
So that's really awesome, man. And where did you get the idea to have these 50 informational interviews?
Yeah, so I was going to a leadership. It's like a camp in the summer. It was like a 2-week program. And that was just one of the nuggets that I heard. I said, you know what, that's a really great idea. And then, I took action on it. And so as a college student, it was actually kind of fun because, I would ask all these successful people out. And I was, of course, prepared to buy lunch or breakfast or whatever it is. But like 95% of the time, they're picking up the tab. So that was a really fun way to get a bunch of free meals, too, throughout college. So...
Ninja trick, right?
and by the way, now that I'm in a position, if anybody's out there and is in Austin, Texas, and wants to, do the same thing to me, I'm buying lunch. So here, it's my turn.
Hey, you've heard it here first, Going Long family. If you're in Austin, give Ben a call. Make sure to take him up on that. No, I think that's a really great way to share. I mean, just from the very beginning, because I think this is one of the things that people don't think enough about doing. And the fact that you didn't, I guess what I want the Going Long family to hear is you didn't say that you did 5 informational interviews or even 10, like you did 50 of those. And so to be able to help you understand, maybe not necessarily what you wanted to do, but I'm sure through that process, how many of the things did you figure out that you really didn't want to do based on the conversations that you had?
I mean, I'm guessing, it's kind of, that was pre-podcasting. I'm guessing it's kind of similar to what you've been up to with your podcast, interviewing all these wonderful people on your journey. I'm guessing you have learned a massive amount as well. So good on you.
Yeah, loads. I mean, every single conversation is a new opportunity to learn, and then share that with the entire Going Long family, which really helps us a lot to grow, right? To know what we want to do, and know some of the things that we don't want to do.
Yeah.
And so coming from that, like I know that you've really carved out a really specific niche or niche, however you want to say it, in the commercial real estate space. So maybe tell us a little bit more about this space, because I think it's a really cool space. And then I've got a couple of specific questions that I want to ask you.
Sure. So my team does research every day looking at between 800 and 1,500 deals every week, looking for a very specific niche for us, which is we're looking for high credit tenants with long-term leases within either shopping centers, industrial buildings, or office buildings. And we make about 16 offers a week out of that massive funnel on those deals. Something that might come on the market somewhere between a 7 and an 8 cap, we'll make an offer somewhere between a 9 and a 10 cap. And about 1 out of 16 of those deals we'll have a seller that's motivated enough to sell it to us at that discounted valuation. Mm-hmm. And then 2 out of 3 of the deals that we put under contract will pass our due diligence process. And then from there, so that's kind of the box that we're looking to buy. And then once we have finished our due diligence process, then it comes to me. I'm in charge of investor relations and raising capital and education. And so then I bring it out to our list of investors, relationships, people that I know, and I offer them an opportunity to participate with us in that particular deal, which is called a syndication.
Yep. Okay. And I love that. And because of where you are focused, and it's something that we've seen other guests, not a lot, on the Going Long podcast. And so you have a real unique opportunity here to help to continue to educate us, which is something that you enjoy doing as well. But when we look at, because you used a couple words, and I think maybe people may not understand what they mean, so you're going to help us. When you talk about a high credit tenant, number one, what does that mean? And I don't normally do this, ask like 3 questions altogether, but I think if you can tie these 3 terms together, it will be very helpful. So the high credit tenant, and then also what is a net, and then what is a triple net? You didn't talk about the last 2, but I think if you can talk about how these 3, what they are, and then later we'll talk about maybe what attracted you to them, would be great.
Sure. So we buy these commercial real estate buildings that already have tenants in them. So for example, we recently bought a building that's occupied by a Walgreens, right? Walgreens is, everyone knows that in the US, they're a big company. They have high credit. In other words, they're going to pay the rent every month, right? Just if they don't, then their credit's going to get damaged and they want to maintain their credit score, right? So that's one example. And we buy about 8 to 10 of these types of deals every year. Mm-hmm. So almost, not every month, but almost every month we're buying another different deal. Okay. And then you asked me about triple net. So triple net is the net of the taxes, the insurance, and the maintenance of the property. And on triple net leases, within the lease, those expenses are passed through, or they're the responsibility of the tenants. And so as a landlord, we are not concerned or responsible, rather, for those expenses. If taxes go up, we don't want that to happen, but it's not our responsibility. It's the tenant's responsibility. Same thing for insurance and the maintenance of the project. And those are usually, if it's single tenant, then that tenant is responsible for all the triple nets. If it's multi-tenant, then it's divided up pro rata depending on their square footage of the property. So there you go.
Perfect. And so we now know what the high credit tenant is. We know what the triple net is, which is the tenant pays, well, not only their rent, but they also pay the taxes, the insurance, and the maintenance, which sounds to me like, as the owner of the property, you really just need to make sure that the property is taken care of, and you put your hand out, and that's pretty much you're collecting a rent check every week.
Yes.
Another concept, and maybe I'll give an example. If you can give us an example, you talked about the Walgreens before, and so, but then afterwards you mentioned where there are multiple tenants. So does that mean, is that a shopping center or is that a strip mall? What is that for people so that they can understand the difference?
Yeah, for us, it's either a multi-tenant shopping center. Maybe it has a grocery store and a Petco and a FedEx and a Leslie Pool Supply, things like that. Or maybe it's an office building that has doctor's offices and dentists and so on and so forth. Or we recently bought an industrial building that has a big publicly traded company in it, like Moen, the faucet maker, for example. So things like that, big name tenants that are committed to the real estate, that have been there a long time usually, and they already have a lease obligation that's more than 5 years upon the day that we acquire that property. So we know for sure, or at least most likely, because anything can happen. But for the next 5 years, we know what the cash flows are going to be, or and beyond. And so we like that predictable cash flow. And that way, when we receive rents on the first, we're in a position to pay dividends, preferred return to our investors on the 15th of every single month. And that is the key to financial freedom. That is what we're providing to our investors, is that consistent, predictable, passive income. And that's what I love about what we get to do.
Okay, and that's fantastic. And when you have leases that are over 5 years, then that really gives you the runway to be able to see, okay, we can predict with a high degree of confidence that the revenues minus the expenses, which are pretty minimal, will be X, which will allow you to help to predict the cash flows for your distributions for your investors, which sounds pretty simple to me. I like simple. In the Going Along family, most of us really like simple. One of the things, yeah, keep it very simple. So one of the things that you mentioned before also too is that you use the Walgreens. So we're going to go back to the Walgreens example just to make sure that everybody really understands it. So because a company like Walgreens is a listed type of a company, it's easy to get their all of their financials because they have to publish them, which is one of the ways, I guess, is part of your way to see if they're high credit or not. What percentage of those types of tenants, which are kind of in the single space, are listed companies versus companies that are not listed, that may make it a little bit more challenging to get the credit worthiness there?
Yeah, so it depends. We have our criteria is where at least 30% of the tenancy is triple B credit or higher. That's our minimum. Okay. Generally speaking, it's significantly higher than that. But for the tenants that are not listed, we will dive into, to the extent that we can, their financials. We'll interview the tenants. We'll spend time at the property. We'll talk to the managers, and we'll look at that business model in general. Is it something that's going to get crushed by Amazon? I mean, the secret about Amazon is out, right? So we're looking for things that are Amazon resistant, or have those unit economics, those basic fundamental business concepts that are already in place there, so that it will be sustainable throughout a worldwide pandemic or whatever comes next, right? And so we're really focusing on the basics, and then from there we kind of go up from there to make sure that it's a sound and sustainable business investment.
Okay, and I like that a lot, and I appreciate it, Ben. And what it sounded like you were starting to talk to us about is a little in the terms of the way that you understand the predictability of income and downsizing the risks and things like that, which we really like to talk about due diligence. And without giving away your secret sauce, of course, because that's part of it, I'm sure, is can you help us understand with this type of an asset, kind of what does that due diligence process really look like? And like I said, maybe you started to talk a little bit about it, but if you could help to educate us once again, because this is a different type, this isn't a multifamily apartment building, right?
Sure.
Help us out with that.
Let me go ahead and float this out there. So I recently wrote a book on this topic. It's called 5 Things to Consider When Investing in Commercial Real Estate Syndication. And so you can find that on my website, hjhinvestments.com/book. And within that, we go into these types of topics. We talk about the goals and strategies, ways to diversify your portfolio. We go into details on the property criteria, similar to what I was just talking about. We talk about the track record of the sponsor. Right? So we talk about us and the questions that you may want to ask somebody that you're considering investing with. And then we go into have you ever heard of Solomon's 3 principles of valuation?
No, share it with us.
No, so Solomon's a professor at Harvard, and I studied a little bit of his lessons, and one of my favorite things was the second principle, where he talks about the 4 rules of cash. So I'm going to give you the 4 rules of cash. Ready?
Yep.
Okay, here we go. It's real simple. More cash is better than less cash. Easy enough. Yep. We'll get into more detail on that. There's deeper concepts, but we're going to keep it simple for now, right? Cash sooner is better than cash later, right? Less risky cash is better than risky cash. And rule number 4, make that better, never run out of cash.
I think rule number 4 makes a lot of sense, because once you run out of cash, it doesn't matter if you get it sooner, later, if it's riskier, less risky. I guess none of it really even matters, or if it's better or less.
Yeah. So those are the 4 rules of cash. Number 2 in particular, which is cash sooner is better than cash later. That's one of my favorites, because when I'm investing, because I invest in all of our deals as well, I'm looking for immediate returns on my capital. And since we already have cash flow coming in from these long-term lease, high credit tenants and long-term leases, when we have rent come in on the 1st, we distribute out a preferred return to our investors on the 15th. As opposed to, and I'm not knocking it, but there are other deals where you put money in on year 1 and you have to wait 2, 3, 4, 5 years to get a return on your investment somewhere in the future. And so I'm a big fan of cash now is better than cash later. And so I'm always looking for deals where I can start seeing return on my investment right away. And so I like to encourage other people to do the same.
Well, yeah, and that makes a lot of sense. And I know you mentioned before that you have written an ebook on that, and so we'll also be able to come back to. And this is a really great example of the 4 rules of cash. And is there anything else that, I guess, that even if you think about the book, like things that would be really interesting, just kind of as a teaser almost, that would also be interesting for the Going Long family to find out what else they could find out in the ebook?
Yeah, I think diversification wins the game. Frankly, I mean, some people say put all your eggs in one basket and watch it really closely, similar to like a Warren Buffett. But I take a different approach, and I think that it's better to look and spread your assets amongst a lot of different places. There are pros and cons to that. So I encourage people to look at it from that perspective, which is why we diversify our portfolio between retail, office, and industrial. And we give people opportunities to pick and choose what they want to be in or not be in, depending on whatever is in the portfolio. Yep. So that's one of the things I've mentioned.
Okay, and that can also be something that fits into each individual investor's portfolio. I mean, like I said, different strokes for different folks. We always like to say here, what we want to be able to do is provide options and contact information so that you can have the conversations with the people that makes the most sense for you, right? And for the investor, of course. One of the things that, like, this is the Going Long podcast, right? And most people know, like, not a big secret, Billy lives in Spain and has been investing exclusively in the United States in a number of different assets, whether it's multifamily, mobile home parks, ATM machines, energy equipment, and because that works for me and my model. And I think that you can live wherever you want in the world and you can invest where it absolutely makes sense and aligns with your overall philosophy. But at the basis of all that is this whole concept of going long, like investing beyond your backyard. And so I happen to know, or I think I understand, that with your model, where you live is not necessarily exclusively where you make your investment. So why in the world, and I just always ask this question, right? Because the books tell us, invest beyond your backyard or invest in your backyard. That's where you got to go because you got to drive by every single day, right? And that's what most people grow up doing, like 95% of the population. Maybe I'm exaggerating a little bit, but there are a precious few of us that believe that, well, you live where you want and you invest wherever it makes sense. Why in the world, Ben, would you all invest beyond Austin, Texas?
Sure. So it's real simple. We can't buy a Walgreens in Austin for a 9 or a 10 cap. It just doesn't exist. Those are trading somewhere in a 5 or a 6 cap range. And so Austin's a hot market right now. People are looking for yield or a higher return on their capital. And so that means you got to go outside of Austin. You got to go outside of your backyard, and you got to start building your network. You got to start having connections and relationships with people, because really at the end of the day, this is a people business, in my opinion. And so reaching out to people outside of your backyard, so to speak, is what wins the game. Most of our assets are outside of Texas. We have about $320 million worth of assets under management at this point. A majority of it is spread throughout the Midwest. So Indiana, Ohio, Michigan, Missouri, Kansas, so on and so forth. And so we have relationships within our network of people that oversee our portfolio. And we have all the systems in place to make sure that all the tenants, all the properties, and all the people are really taken care of.
Yeah, and once again, I mean, you're giving a perfect example. You go where you find the opportunities, and I believe, and it sounds like you're saying very much the same, is that you must have the team in place, because if you are going to be a long distance investor, whether you're doing that actively or passively, the real crucial point is, once you've understood that the location will provide you what it is, the benefit that you're looking for, is make sure that the team is a world-class team that can operate against the business plan that you've put in place, so that you can derive the benefit and value that you're looking to derive. And once again, whether you're an active investor or a passive investor. Love that. So
couldn't have said it better myself. That's great.
Perfect. So, and also too, Ben, one of the things is, I know that you happen to be absolutely obsessed with protecting investor capital. Like, it comes through, you talked about it before, you go to your website, you see it all over the place. Where does this obsession come from?
Yeah. So when you raise money from other people, first of all, you get humbled, right? And then you realize how important it is to take care of other people. That's just a value that I grew up with, taking care of other people, like family. And so our investors, we have a few hundred investors. We call them we're the HJH Investments family. And so those people, you out there, you've worked hard for your money, and you want to make sure that it's protected. And just about everybody I speak with, they are more concerned about return of capital than return on capital. And so protecting and then growing investor capital is always the first question. That's the first thing that we're focused on at HJH Investments. And it's very important to me.
So I love that. And I'm going to replay one of the things you just said, because I want the entire Going Long family to hear exactly what you said. It's the return of capital is the most important thing. And it's the return on the capital afterwards, right? Because when you place $200,000 in an investment, first and foremost, you want your $200,000 back. And then you want everything on top of that, right? Is something that is really important. Definitely aligned with what we feel here at the Going Long family. And when I saw that and I read that about you in this obsession, I'm like, oh my gosh, I just want him to share this with us, because it's going to be awesome. So love that. So absolutely love that. And so give us a kind of give us an idea also too, Ben, like how you're giving back, because I know you're helping to educate people, and this is something that's important for you, the realization that you're also a teacher. But maybe talk to us about some of the ways that you give back or share within the community or communities or your family that you're involved with.
Yeah. So I mentor a lot of people, which is really an honor and a pleasure. I'm pretty heavily involved in the Jewish community as a leader within a national organization. And so I had the opportunity to help other people, not only across North America, but also we're involved in helping the communities across Europe, across South America, really across the world, since we're in a blessed position to be able to help people. So we're always looking for opportunities to try to help, just depending on whatever that particular need is. And so being involved, being available, donating cash, donating time, those are things that are really a passion of mine as well. And just, grateful and blessed to be in a position to be able to do that.
All right. So absolutely love that. And also you even offered to take people out to lunch if they're in the Austin
Oh,
area. So you talked about both time and money earlier. So which is fantastic. So you practice what you preach. So I like that a lot. Um, Listen, so I guess before we wrap things up and go into the going long final three, kind of give us a look, like where are things with you and with HJH in the next 12, let's say 12 to 18 months? How are things looking? How are you adding value? How are you impacting other people's lives?
yeah. So, great question. Love that. So, first and foremost, protecting our investors' capital. That's what's always most important. Second of all, we're growing pretty rapidly with the ebook. And now that I'm sort of sharing this story with podcasts, this is a new venue for me as well. And we're growing. So we're at, it took us about 5 or 6 years to get to just over $300 million worth of property. Aiming to do another 150 million within the next 12 to 18 months, probably. And so we're looking at we're aiming for $1 billion probably within the next 5 years, I think. And so we're growing, and we love meeting new people and sharing the story and about what we were able to do with people, and it's just been fun. So I love connecting with people, and especially people that are not in our world, not in North America, not experienced in commercial real estate syndication. And so really just connecting and educating more people is really what my main focus is.
Okay. Awesome. So that sounds great. So be able to get out and impact more lives positively, increase the portfolio as well, and on that track to $1 billion of assets under management, which is fantastic. So here's the thing, Ben. Like, we've got to get to the going long final three. And so the thing is, I never ask anybody to go along final three unless they tell me that they're ready. So are you ready?
Let's do it.
All right, let's do it. Here we go. I knew you'd be ready, man. I knew it. So listen. First of all, we started with you over on that side of the pond. Now we're going to bring it back to Europe. And so help us understand, what is your favorite European city been that either that you visited or is still on your bucket list to visit?
So my favorite city is in Hvar, Croatia. And it's on the Adriatic Sea, and you have to get there via boat. And there's a little boutique hotel there called the Little Green Bay, which I would highly recommend everybody go check out. It's just a little slice of heaven on earth.
The Little Green Bay. Okay. In Hvar, Croatia. Love that. We've not had that one before. So very, very cool. Thank you, Ben. And so here's the thing. Question number 2 of the going long final three. Thing that I recognize about all successful individuals, and you are a successful individual, you have a proven track record, is that all successful people have only made one mistake throughout their entire trajectory, which is what. Okay, sorry. I always feel like I get that wrong, and I think I did get that wrong again. So here's the thing. Successful people make lots of mistakes, not just one, lots and lots and lots and lots of mistakes, or learning opportunities, or however you want to call it, Ben. But the thing that really successful people do differently is they learn from each of those experiences. And so I would love for you to share, if you can think of all the different learning opportunities or mistakes that you made, what is the one lesson that you think would be very, very relevant for the Going Long family to learn from?
Yeah, I'm going to tie this one back to the informational interviews, which is that it's better to copy genius than create mediocrity. And so what I mean by that is find someone that is further along the path, that has success, that has already been beaten up by the market and the world, so on and so forth, and learn from them. And that'll help you kind of slice through the problems on a quicker path. And so I've surrounded myself with mentors, still continue to do so to this day, in order to kind of accelerate my path to get me to where I am and where I am going. And so I would highly recommend anybody out there, copy genius, don't create mediocrity. And I'm not telling you not to go out and create something new from scratch, but I am saying there are definitely some life lessons along the way that you can save yourself some time, money, pain, so on and so forth by learning from mentors who can help, hold your hand and guide you along that path. And so I've never paid for a mentor. like a mentor program per se. But I know there are a lot of those out there, but there is also a lot of great people out there who are just simply willing to help. So if anybody wants to reach out, have some questions and some feedback, I do that all the time and happy to lend a hand.
Yeah, and I love that. And copy genius rather than create mediocrity. I love that. And yes, you're absolutely right. There's so many different ways that people can be mentors and provide you with value, and you looking to have an equal exchange, right? And so I love that. And so it's going into our very last question, the going along final three, Ben, which is helping everybody to feed the brain. So help us understand, what is the one book that you would recommend to the going along family?
So one of the books that has been a big influence on us is Gary Keller wrote a book called The One Thing. And the one thing is, that's our one thing is first to protect and grow our investors' capital within commercial real estate syndication with high credit tenants and long-term leases. That is our one thing. And we have many opportunities. We get asked all the time to go and do other things. But no, we are focused on our one thing, and that has really been like rocket fuel for me and within our company to continue to grow. So I know it's probably a popular book out there, and I would endorse that one. Gary happens to also to be an Austin, Texas resident, so hook him on that. And so one thing.
All right, awesome. So One Thing definitely is a phenomenal book, big, major influence on me as well. And it reminds you to make sure that the one thing is the one thing, push on that big domino, and all the other things kind of become irrelevant after that. So Ben, man, this has been really, really awesome. So if I think back to the very beginning when you're talking about 2004 and getting your CCIM, and then from there getting some experience, then really getting the focus in 2011 and getting that MBA, and then from there just continuing to go out and to add value, finding your love for being able to educate others and teach and learn and grow, and then finding your niche, which is really in this space with high credit tenants and the triple net leases, which I think is phenomenal. And also at the same time, you're looking to continue to have a positive impact on others that are looking to invest passively through syndications. And so you talked about earlier your book that you also put out there to help to impact people positively. And I know all of the positive things that you've shared with us during this conversation, that so many people in the Going Along family are thinking to themselves, I want to get in touch with Ben. I want to find out more about what he's doing. I want to find out more about HJH investments. So please, Ben, help us understand, what is the best way for the Going Along family to find out more about what you're doing and get in touch with you and your team?
Yeah, I'd point you to our website, hjhinvestments.com. And if you want the book, you can go to /book, or you can find me on all the socials. I have @Ben Kogut. My last name is spelled Kogut. I have all the @Ben Koguts I could find. And so, but mostly on LinkedIn or, Instagram or Facebook or whatever, just hit me up and I'm available and love to connect. So thank you for the opportunity.
All right. Perfect. Thank you so much, Ben. Really appreciate that. And listen, Going Along family, one of the things I'm going to ask of you, I've been to Ben's website. It's a great website, lots of value. So definitely check him out. He is also offered, he's been kind enough to offer for those people that are in Austin, look him up. He's looking to share his experience, his knowledge with you, and get to build relationships. And so, also when you reach out to Ben, when you reach out to him, make sure that you let him know that you saw him here on the Going Along podcast. So he has a point of reference. It's great for him to know that he's invested his time and energy with us and that you're reaching out as a result of that. So definitely do that. And Ben, I just want to thank you very much, man, for investing your time with me, with the entire Going Along family, and making it a positive experience for everyone. So thank you very much.
Thank you, Billy. It was a really great interview, and I wish you best of luck on your journey as well. And I just am grateful for the time as well.
All right. Well, thank you very much. And if you give me just a couple seconds, Ben, I just want to say a couple last words to the Going Along family, really quickly. Listen, Going Along family, appreciate you investing your time with Ben and I today. Once again, Ben left so much knowledge, so many different pieces of experience that are going to be really valuable for you. And you can take that information and share today's episode with like 2 or 3 other people, because then that gives you the opportunity to be the positive influence on that person's life. And you also give them the opportunity to bring them closer towards the Going Along family and learning from great guests like Ben. And that's something that we want to continue to do, is grow our community with other like-minded people, other like-minded individuals. And you know what? While you're doing that, take a second just to leave us a nice written review, and an honest written review, right? Let us know the things that you like. Let us know the things you want us to change. You want me to change. I go through every single one of these reviews, and it's great. So as we continue to tweak the podcast to make things better for you, but really it's in the basis of your taking this couple seconds to write an honest written review. Really would appreciate that. And until then, I'm really looking forward to welcoming you back on the very next conversation or episode. And until then, go out and make it a great day. And thank you very much. Wow, don't you love hearing from top-notch experts in the field? You know, when I was getting started, I really wish that I would have had access to such experts. And even more, I wish they would have given me like a really simple list of things to follow so that I could have gotten to my goals much faster and been much happier even sooner. So that's why I've created for you the 7 things that you should avoid in order to be successful in long distance investing. And you can pick that up really easily by going to billykeels.com/7 things to avoid. And also, if you liked today's episode, don't forget to leave a 5-star review. I'm looking forward to seeing you on our very next episode, so go out and make it a great day.